All right, as we kick off the third quarter, the bond market is painting a very rosy picture for bank profits. But the million-dollar question is whether that rosy picture is bright enough to outshine the toxic assets banks are still carrying around. Bond market reporter Brian Luke is here with this story. And these toxic assets, we don't hear too much about them anymore. No one talks that much about them anymore, but they're still there.
They're still on the books, Matt. And really what we've got right now, going into the second half of the year, is a big battle between the healthy lending and trading activity that we see with the banks and those old assets, those bad loans from 2008 that are still rearing their ugly head. Now, I want to show you a couple things, though, that's really going to point out what's good about the banks and what's driving operating profits. First, what we've got is a steep yield curve.
We've been talking about this for a while. It's been very steep for a long time, and
exactly.
Getting steeper today.
The steeper, the better for the banks, because they're borrowing at record low rates, and they're lending it out. They call that net interest margin. They love that.
Okay, now I got to say, my bearish viewers watching will say the banks are not lending money.
They're not lending money, but those that they are lending will say that, you know, they're picking up that huge spread. When you look at the 2 to 10-year spread, as that gets wider, it's a good example of how they're making money by borrowing short and lending long for the loans that they are making.
All right, let's move on to number two. You can bring the chart back up.
Yeah, if we could, because I want to talk. We always talk about record bond sales, record stock sales. That generates huge investment banking fees, and that's going to pad the profits. And finally, trading profits. We talk about wide spreads. That for really savvy traders out there that work for these banks, these large banks, these corporations, they're going to be able to add to their fixed income trading profits, as we saw in first quarter.
Okay, so a lot of decent arguments here for banks to make a lot of money, and I think everyone expects banks to beat profit estimates. Is it, though, enough to tower over that massive mountain of toxic assets that's still there?
Well, I guess the real answer is maybe not this quarter, but some analysts believe third and fourth quarter we can actually see that come into the limelight. That is the operating profits. Caught up with Mark Fitzgibbon, director of research at Sandler O'Neill, and he kind of gave an analogy of that it's like a duck's legs underwater, where you have this small little engine pushing this big mountain of bad loans, but it's still pushing it. That duck is still gliding along.
All right, that's one I'm sure I'll hear about a lot more now. Duck's legs. Thanks very much, Brian.